Hi, today I will tell you about technical analysis strategies for beginners. Okay, let's start. Many investors analyze stocks based on their fundamentals, such as their revenue, valuation, or industry trends. Uh, but fundamental factors aren't always reflected in the market price. Technical analysis seeks to predict price movement by examining historical data, mainly price and volume. It helps traders and investors navigate the gap between in, intrinsic value and market price by leveraging techniques like statistical analysis and behavioral economics. Technical analysis technical analysis help guide traders to um, technical analysis 1 minute helps guide traders to what most likely to happen given past information. Most investors use both technical and fundamental analysis to make decisions. Okay, choose the right approach. There are generally two different ways to approach technical analysis: is top-down approach and the bottom-up approach. Oftentimes, short-term trades will take a top-down approach and long-term investors will take a bottom-up approach. In addition to this, there are five core steps to getting started with technical analysis. Top-down. The top-down approach is macroeconomic analysis that looks at the overall economy before focusing on individual securities. A trader would first focus on economies, then sectors, and then companies in the case of stocks. Traders using the approach focus on short-term gains and opposite to long-term valuations. For example, a trader may be interested in stocks that broke out from their 50-day moving average as buying opportunity. The next is bottom up. The bottom up approach focuses on individual stocks as opposite to a macroeconomic view. It involves analyzing a stock that appears fundamentally investing for potential and entry and exit points. For example, an investor may find an undervalued stock in downtrend and use technical analysis to identify a specific entry point. When the stock could be bottoming out, they seek value in their decision and intend to hold a long-term view on their trades. In addition to these considerations, different types of trading might prefer users different forms of technical analysis. Day traders might use simple trade lines and volume indicators to make decisions, while swing or position traders may prefer chart patterns and technical indicators. Traders developing automated algorithm may have entirely different requirements that use a combination of volume indicators and technical indicators to drive decision making. Okay, pick a strategy or develop a trading system. The first step is to identify a strategy or develop trading system. For example, a novice trading may decide to follow a moving average crossover strategy, where they will track two moving averages 50-day and 200-day on particular stock price movement. For this strategy, if the short-term 50-day moving average goes above the long-term 200-day moving average, it indicates an upward price trend and generates a buy signal. The opposite is true for a sell signal. Okay? Identify securities. Not all stock or securities will fit with the above strategy, which is ideal for highly liquid and volatile stock instead of illiquid or stable stocks. Different stocks or contracts may also require different parameter choice. In the case, different moving average like a 15-day and 15-day and 50-day moving average. Find the right brokerage. Get the right trading account that supports the selected type of security, e.g. common stocks, penny stocks, futures, opposition, etc. Yeah. It should offer the required functionality for tracking and monitoring the selected technical indicators while keeping cost low to avoid eating into profits. For the above strategy, a basic account with moving averages on candlestick charts would work. Track and monitor trades. Traders may require different levels of functionality depending on their strategy. For example, day traders will require a margin account that provides access level to level 2 quotes and make it a marker visibility. But for our example above, a basic account may be preferable as a lower cost option. You can use additional software or tools. There may be other features that are needed to maximize performance. Some traders may require mobile alerts or access to trading on the go, while others may leverage automated trading system to execute traders on their behalf. The bottom line. Many investors leverage both fundamentals and technical analysis when making investment decisions. Science technical analysis helps fill in the gaps of knowledge by developing an understanding of technical analysis. Traders and investors can improve their long-term risk adjustment returns. But it's important to understand and practice this technical before committing a real capital to avoid a costly mistake. So this is all what I want to tell you today. We will meet in the next video. Goodbye, guys.